Yo, what's going on, everybody? Happy New Year, 2024, 2024. Let's ring it in. We already did. All right, here we go. Hope everybody had a nice, fun New Year. I'm happy that it's all over. I can't stand the holidays. Let's get them over. Let's get back to our routine. Let's get back to our discipline. Let's get back to doing our stuff. So the stock market correction has begun. This is the correction that I thought was going to happen in mid-January, mid-December because of the tax strain. It wasn't that big of a tax strain, actually. But I've been saying to you guys that the big rally towards the end of December was, I think, was an unwinding of all the bearish bets that the monetarists put on all through 2023. I'm still seeing these headlines about how everybody got everything wrong. Well, I didn't get everything wrong. My MMT trader service actually got everything right. But I'm still seeing those headlines pop up. And as I've discussed many times already, like if you don't understand, if you just lack understanding, then it basically just becomes a guess, and you're going to get it wrong. First of all, when you're talking about these monetarist zombies, it's not even a lack of understanding that makes things precarious. It's the fact that they got it backwards. They got the whole thing backwards, which makes me very curious about this year, and I'll tell you why. But let me talk a little bit about this correction. This is the correction. I believe the market got ahead of itself. I believe that the rally in the late part of December was, like I said, due to the unwinding of all these bearish positions that the monetarists had on. You know, they were shorting the market. They were in cash. They were out of the market through the entire year because of the Fed rate hikes and blah, blah, blah. And then, you know, when we got that Fed meeting in December, where they said, you know, looks like we can maybe cut rates next year. And they all started to cover their bets. They all started to buy in on a FOMO, fear of missing out basis. I've talked about this type of behavior so many times. You know, if you've been following me for any length of time, like this emotional reflex, just jump in when everybody's doing the same thing. The wrong understanding of the monetary system, the wrong understanding of monetary policy, all this stuff. This is just setting yourself up for one disaster after another. And we saw it. We're not talking about, just your average investors, although they got it wrong too. We're talking about, these are the highest people on Wall Street, folks. This guy, Mike Wilson at Morgan Stanley, he is their chief investment strategist, if I'm correct. He's way up there. I'm sure they're paying him like 7 figures annually. And this guy had it completely wrong. In fact, I did a video just near the end of December where he basically finally capitulated after the whole entire year of the market going up, making new highs, which I said that was going to happen. And he said, now you can buy the market. Now is a good time to buy the market. I was like, you want a sell signal? Well, there you go. You got one. How many times in the past have I said, you really don't need to know too much if you're just a student of behavior, if you observe how people behave and go against the crowd, and if you have some mental game, if you have some resilience, if you're strong mentally, you're going to be fine. You just have to observe this behavior, and if this doesn't just shoot out to you how irrational and how self-defeating this is, then I don't know what other examples. So that leads me in. Let me just finish off with this correction that's going on right now, because I think this could carry into the first quarter in a pretty significant way. because I think there are going to be some negative surprises in fourth quarter earnings, which are going to start to come out very soon. As a matter of fact, I think this week. And they'll roll out through the rest of the first quarter. And don't forget, and I mentioned this to you guys, we had an economic slowdown in the fourth quarter of last year when we went from like a 5.6% growth rate in the third quarter down to like a 2.5%, 2.4% growth rate. So that's a significant slowdown. And I think earnings are going to reflect that. We got a little bit of a hint on that with the FedEx earnings and guidance at the end of December. And so I think there could be some negative surprises, and that'll bring the market down. We still have a positive fiscal environment. Okay, fiscal flows are very strong. We have a positive fiscal environment. So right now, I'm not worried, and I don't see anything other than the fact that the growth rate in the fiscal flows, that's going to slow down this year. It's still going to be positive year over year, but the growth rate, the trajectory, the degree of acceleration, if you will, that's going to slow down. So if you use the swimming pool analogy, last year we had the water flowing out of the pipe into the pool at a very rapid rate. Okay, the pool was filling up fast. That's why, despite the rate hikes and all the bearish sentiment, the market ran up to new highs. This year in 2024, the water is going to be coming out of that pipe at a slower pace. Okay, so it's still positive. You're still filling up the pool, but you're not filling up the pool at the same rate that you were filling it up last year. Okay, so what does that mean? If you're in the markets, same thing. I mean, the overarching picture is bullish. You want to be patient. You want to wait for these pullbacks, and you want to add to your position on these pullbacks. And when I say that, I like to tell people, look, keep it simple. Stick with big name companies that dominate in their industry, in their field, and just wait for these times when investors lose their minds and sell them off, and you have them at a discount. You don't have to go around finding the next Apple or the next Amazon or the next Google. I mean, great if you can do that. I can't do that. I don't know how to do that. I don't invest in really too many IPOs or penny stocks or anything like that. I buy the big names, the big banks, the big tech companies, energy company, all the big names. I buy those, but I sit around and I wait until people sell them down. And there's always opportunities during the year. You get many, many opportunities during the year when people sell off these stocks. Look, you're having it with Apple right now. Okay, there was some negative guidance put out by some Wall Street brokerage firm. They cut their outlook, whatever. I don't pay attention. I don't pay attention to what Wall Street analysts say. In fact, I like it when they come out negative on these great world-class leading companies like Apple. Let people freak out. Let people panic and sell it down. And I'm there as a buyer. I just show up with my bushel basket and I'm buying. All right, so much for that. What's interesting to me in 2024 is when I look back at last year and really looking back into, from March 2022 when the Fed started to raise rates all the way into last year, again, how wrong the monetarists got it because of their lack of understanding or their flawed understanding of monetary policy. Okay, it's again this single variable view. I won't even call it an understanding. It's a single variable view. They don't understand that rate hikes also equate to fiscal transfers. I mean, there's still stories about that every single day. Oh my God, the government's going to be spending more on interest now than it is on defense. Well, yeah, that's a transfer to the economy. That people get that, institutions get that. That's free income basically. But that's like blocked out of their heads. But anyway, they got 2023 so wrong based on a wrong understanding. And they're going to get I'm telling you this right now, okay? We can go back and we're going to visit this maybe in December of 2024. They're going to get 2024 wrong too. Because rate cuts, and now they all covered their bearish positions, and now they're saying, now you can go into the market. Now's the time. No, now the time was in October 2022 when I was telling you that was the inflection point, that was the turning point, okay? But now all these guys are saying now is the time, okay? And I was laughing before because I said if you wanted a better sell signal, but anyway, that's like a short-term sell signal. But here's what I'm saying. Rate cuts, if they happen this year, and we don't know, but it looks like, the market's pricing in like a crazy 5 or 6 rate cuts. The Fed never intimated that they were going to do that much. They were talking about 75 basis points, like later. But we know the Powell Fed, what do? They follow the market. So the market's already predicting a rate cut in March. And if the Powell Fed continues to behave like it's behaved all along, they'll do a rate cut in March. But here's the thing I want to emphasize. And here's the thing why I'm saying the monetarists are going to get it all wrong again. Because rate cuts are going to remove income. It's the opposite of a fiscal transfer. It's a fiscal drain. Okay? And it'll start to remove that interest income that was so fundamental to the rally and to the strength in the economy last year. The rate cuts will start to do the opposite. It'll start to remove that. So what does that mean? Does that mean we go into recession? I don't think we're going to go into recession because remember how the Fed operates. It goes incrementally, 25 basis points. But what will happen is it'll slow down economic growth. So this goes back to that analogy of the pipe with the water coming out. The flow, the pace of the flow of that water going into the pool is going to slow down maybe significantly this year. Now, I don't think there's going to be a recession, but I would say this. It raises the probability of a recession higher than the probability last year. And I said last year, going into last year, when everybody, remember folks, everybody was predicting a recession in 2023, I said unequivocally, there would not be a recession. As long as Congress raised the debt ceiling, I said that there would not be a recession. I didn't equivocate. I didn't say, well, maybe there might not be a recession if this happened. I said, no, as long as they raise the debt ceiling, I was flat out saying there was not going to be a recession. I was right about that. And I'm saying this year, if the Fed starts to cut rates, we're going to see slower economic growth. Does that mean it's going to go into a recession? I doubt it. But the probability goes up a little bit more because you don't want to really see a slowdown in economic growth. But a slowdown will bring the inflation rate down, okay? And that helps growth in real terms. So it's going to be a very fascinating year. And here I am at the beginning of 2024 telling you exactly how it's going to play out. Now, we have something in November called the presidential election, and that's going to be freaking wild. And, we'll deal with that when it happens, or we'll deal with that as the election cycle starts to manifest and starts to get going. When are was it the Iowa caucuses or something like that? I mean, are they in January? I don't know. Doesn't stuff start to happen? Anyway, we'll get to that. And that's going to be a lot of headline. We're going to get a lot of headline risk this year, a lot of headline trading, if you will, from, the primaries and what's happening on the ballots with Trump and this and that. But I'm telling you what's going to happen, folks. They're going to get it wrong again. And here is the fascinating thing about it. And I've talked about this so many times. They're never, ever, ever going to go back to the drawing board and try to reevaluate or reassess or try to rethink like what happened. 2023 was a blowout for all these guys. Nobody is questioning like what happened. Don't you find that curious? Don't you find that odd? Don't you find that strange? I do. Like nobody is asking a question like, gee, why did we all get this wrong? Nobody. It's just like, okay, we all got it wrong. Next, let's buy now. Because the same mentality. Okay, they're going to cut rates, so it's going to go up. Well, when they raised rates and you told everybody it was going to go down, it didn't go down. So are you rethinking that whole thing? No, they're not rethinking the whole thing. They're sticking with the same thing. And now it's just, okay, on to the next disaster. Let's buy now because they're going to cut rates. So like this to me is just, I don't even know the adjective, the word, because you got, again, these are highly educated people. They're all at the top levels of the financial industry or economics. They don't question, no one, not ever do you hear someone say, gee, I wonder why we all got that wrong. What was it about that view that didn't pan out? Like, was there something in our thinking? Was there something in our understanding? And was there something no, nothing. Just totally ignore the fact. Let's move on to the next thing. Oh, what's the next thing? The Fed's going to cut rates. Oh, that's a guarantee. Folks, whenever somebody tells you, but now they're all doing the same thing now. They're all doing the same thing just like they all did the same thing last year. Nobody's looking around in that room saying, we were all wrong. Now we're all getting in on this side. Maybe you would think like one or two of them in that room would say, you know what, I think I'm getting out of this room. I think I'm moving to a different kind of view, or at least staying on. No. Like sheep, like the lemmings running off the edge of the cliff. I find it incredible. I really do. Don't you? I mean, think about it. It is unbelievable. Like, I don't know what you guys do for a living or what kind of work, and I don't care. And, it could be good, honest work. That's great. That's wonderful. That's what makes this country great. But don't you look at these people and think like, what the hell is wrong with them? Like they're in some kind of crazy bubble that does not allow them to think outside of that bubble. And they're all in there like grasping onto each other. Like, and the worst thing is that they think they're above you. And not just a little bit above you. They think they're really, and me, forget about it. They would think they're so above me that it's ridiculous. And fine, I don't care. I take their money. That's it. I got my little channel here, which hardly anybody watches. That's another thing. You got these YouTubers out there, commenting on finance and the markets. And it's like, if I was creative and if I knew how to make these videos like in a real creative way, and I would take snippets of some of this stuff like every day and edit it and show you how but it's too much work and I don't want to be bothered by it. I think you guys understand where I'm coming from on this. So, I mean, it's incredible. It really is. Anyway, that's it for today. First video of the new year 2024. I want everybody to sign up for my report this year, MMT Trader. Go to my website, pitbulleconomics.com, and sign up today. Sign up today for a 30-day free trial. You get to look at it for 30 days. There's nobody out there who does what I do. I take it's an applied approach to MMT. It takes the concepts and I take the concepts and understandings of modern monetary theory, MMT, and I show you how to use that to profit in the financial markets. Okay? I'll see you tomorrow. Bye.